You'll never believe this, but in June, I was talking about prices and I forecast what would happen that would be reported this month. It's kind of wild. Over the next 60 days, you're about to see prices drop pretty dramatically. What we're about to discuss is a headline you're not going to hear about until the first week in September. And that's why we can look at this chart, we can invert the price cut percentage, push it out 60 days, overlay the median price, and know that prices are indeed about to drop dramatically. It's pretty easy to see that a $30,000 drop from peak, which peak was in the middle of the month, it's about 515, that would put us in the 480s. That's a very realistic price drop for what we're seeing in the price cuts. And here we are, Greater Nashville Realtors, they're about to post August on Monday, and it will be 485, exactly where I said it would be. Now, this begs the question, where are we headed next? Are prices going to keep dropping? Now, before we get there, I know some of you all will dismiss this massive price drop as just seasonal. Here are a few reasons that this is actually much more than seasonal. Number one, last year we averaged 2,100 active listings with price cuts in August. This year, it's 2,700. Active listings are up 20% year over year. Contract volume is flat compared to last year. This kills the narrative that there was an inventory shortage driving the low transaction volume. We had a 6% year over year gain in June. It's rapidly shrunk, and now we're only at 1.5% above where we were last year. Last August, prices were moving up. This August, they're dropping dramatically. Expired and canceled listings in Davidson County are up 56% versus last August. And expired and canceled are greater than they were pre-COVID by a long shot. We're going to get into that. I'm going to show you. It's pretty wild. But by the way, you may or may not have caught it, but I reached out to Greater Nashville Realtors after they changed their methodology last month, and lo and behold, they fixed it to be consistent with the way they've been pulling all year. Kudos to them for correcting their change, and anyone who works in data, they'll tell you just how hard it is to be consistent and clear. So it's not always intentional. They fixed it. They have my respect. Kudos to them. Now, let's talk about what's next for prices. It's going to be super interesting. So without further ado, let's get into the data. Okay, first things first, I built this dashboard. I'm really excited about it. But let's start off with active listings. Active listings are actually hitting a new high. We're going to look at another chart year over year, but we're hitting a new high while demand is again just basically flat and trending down for this time of year. This means you have more options and fewer competition. For the most part, there are still some competitive areas out there. I know a lot of the $1 million buyers have been like, no, it's a seller's market, but places like Nolensville, there is an open house neighborhood today. They've got 7 open houses in this neighborhood, 7 or 6. I can't remember, but I'll see if I can find the picture. I'll post it. But 7 open houses in one neighborhood this weekend just to try to drum up some interest. Nolensville, that's pretty wild. Let's look at price. Price is continuing to drop. Look at this massive buildup in price. And now it is tanking. We're down to 480. And it's just wild to see. This is what I forecast. It's coming to fruition. Now, will it continue? We're going to talk about it, but contract price is a good leading indicator. Contract price is actually stabilized. So will it continue? May drop for September down to 475, so another percent from where it was. This brings us back down really close to where we were last year, but we have erased a lot of the gains. It's pretty wild, pretty wild. Look at price cuts though. This is another stabilizer here. Price cuts are actually down from where they were last month. That ramp kind of stopped in August. We did not see a massive ramp in price cuts in August, and it doesn't appear that we're seeing it in September. So a lot of that inventory that was cutting their prices, people are buying it, they're asking for those big discounts, and they're getting it. Now, those will go into comps, but we're starting to see the price cuts start to drop and fall away. We're seeing demand stabilize, which, by the way, mortgage rates are tanking. And this is starting, in my opinion, to stabilize the market here in Nashville. We're starting to see But we're just starting to see, oh yeah, here we go. West Haven. West Haven's a good example. I know I talk about West Haven a lot, but it's 1 in 20 houses that sell in Williamson County. But look at this. We can see active listings actually dropping pretty dramatically here in West Haven. We can see contract volume as high as where it was in April, which is pretty wild. And look at the price cuts. Price cuts were at 14. Price cuts were at 14. Now they're down to 5. So price cuts have been cut into a third of what they were, even as contract volume's up. And our inventory, in May we had 51. Our inventory's dropped pretty dramatically to 32. I almost need to check that. Is that right? It just seems so much stronger. Wow. So my point is, and by the way, look at this one. Do you see that one? Morning Mist. I featured on my channel. It's the lowest comp in literally by price per square foot since February of 2023. It's the lowest comp. I told you guys it was a good deal. Closed at 1.4. You saw it first on this channel. You saw it while it was an active listing. I'm only going to tell you guys it's a deal if it's a deal. Which, by the way, my McFerrin listing, I called this out. Someone called BS on the short-term rental getting $50,000 annually. Look, you can do the math. Occupancy was 320 days last year. 320 days, $50,000 in revenue. That's an average of $150 a night. It's actually very achievable if you're super close to downtown and you have something unique and nice. So yeah, this is still on track. I asked for a refresh just last week, and sure enough, we're still on track for $50,000 this year. So that would make 3 years in a row of $50,000 in short-term income. By the way, I also got on Parcel Viewer. One of my buyers that I was talking to about this showed me this, and it's in the Dadu overlay. Okay, so you can actually build in the back. You could potentially build a garage apartment. I haven't talked to Nashville, but it's in the Dadu overlay. That's pretty interesting. Mortgage rates are tanking. Let's be honest. Why are they dropping? They're dropping because this is recessionary. Okay, this is not necessarily a good sign. Labor market is starting to weaken pretty significantly. And to give you an idea, you go back to 2008, they were already cutting. At this stage in the cycle. They're not cutting now. Now, who knows? You know my skepticism of this with the deficit and the massive debt, but I'm just telling you, this is very recessionary, so we got to keep an eye on this. Now, if we go into recession, a full-on recession, will it impact home prices? It's hard to imagine it wouldn't. But how long will it be, and what's on the other side? Is this already stoking inflation? Those are the questions I have. I'm pretty curious about it. I don't know the answer to it. Let's do to active listings. Active listings. Look at that, making a new, I say all-time high. I mean, it's years and years. You got to go back pre-COVID to see this much inventory. And what makes this wild? Look at under contract. Okay, our contract volume is not only flat to last year, but look at where it was in September of 22. It was 30% higher. It's pretty wild. And you can see by county, I pay attention to a lot of these counties, but Williamson's down a little bit, but it's been bobbing up and down. I would say, I'm curious about Nolensville. It seems like it's starting to get pretty soft in Nolensville. Davidson County, down. You can see the others. Look at that, Cheatham, way up. It's just in a different, they're so small numbers though, 51, such small numbers. Anyways, but let's talk about expired and canceled listings, okay? Because I think this is interesting. Even though we have this record new high in supply, look at this. Expired and canceled listings. Look at this. 2840. 2840. This is a massive, this is 30% higher than what we were seeing in the fall of 2019. Okay, so now think about this. We're hitting major inventory highs, well above 2019 levels, or at least above, equal to, depending on what county you're in, 2019 levels. Okay, but at listings canceled and expired. These listings are canceling and expired at a higher rate, 30% higher than where we were in 2019. Okay, so this means that the pool of inventory that we're seeing is actually changing. It's actually evolving, and a lot of the listings that can't sell are getting culled out. And so are these lower price listings? Are they weaker? Are we going to continue to see the prices continue to drop? These are the questions I have. Now, again, I mentioned it is it is more stable right now. Okay, when we look at contract price is stable. When we look at price cuts have stabilized. So we're seeing two of our leading indicators saying we're going into the fall in a much more stable environment. All the price cuts are getting absorbed, just like I showed you in that neighborhood. But are the houses that are coming online, are they lower priced? So those are the questions I have. I don't have an answer right now, but I am keeping an eye on it. What I see now is for September, prices are going to be $475 to $480. That's another 1% to 2% down from where we closed in August. And when we go into October, it does look like it's not going to be much different. So that being said, appreciate you guys watching. Have a good weekend, and I'll see you next Saturday.